Hey everybody, Chuck Barone here. Tuesday, August the 23rd, 2022. A very interesting day today, big economic news. Like always, before we start the show, I just want to thank everybody for their support for the show and the channel. All of your guys' likes, comments, questions, and your support watching the videos and doing what we do here it just means the world to us, guys. And I can't tell you how much we really appreciate it. Also, a special shout out to my man Jordan Dove, who's helping me with my videos this week while Jake's in Ireland. We really appreciate your help, Jordan. Yesterday's video came out pretty good. In the markets today, guys, well, kind of a weird day, right? So the markets open up. The 10-year goes down to about 298, 2.98%. Stocks looking like they're going to have a pretty good day. Toward the end of the day, of course, the bond market has a little sell-off. 10-year jumps back up to 305. Stocks follow that bond sell-off, ending the day down, not by big numbers, but ending the day down nonetheless. And I think that the market is kind of showing a sensitivity now where this 10-year gets above 3 to 305. The market doesn't like it. I think that it's going to be interesting to see what happens in September when the Fed raises again. What happens with this 10-year rate and how the bond market's going to react to it. It's going to be interesting to see it. It really is. Again, in the bond market today, bonds started out with a buyer's market, ended the day selling off pretty strongly toward the end. The 10-year finishing at about 305. Again, stocks hating this number on the 10-year. Interestingly, though, the spread between the 10-year and the 2-year is narrowing now. Last I saw, down to about 26 basis points. So it looks like the yield curve is kind of flattening out. I'm going to have to do a little bit of research to kind of figure out if that's ever happened before, when we had it inverted and then it kind of went back to normal or flattened out. What does that really mean? We'll have a little bit of information coming up on that, because this seems to be something a little bit unusual happening in the bond market. The dollar today, down small, but still very strong on the dollar index. That's 108.55 on the index. Right now, the dollar's king. No other currency around the world is really competing in any way, shape, or form. Now, when I say the dollar is up and down on the index, I'm not talking about the purchasing power of the dollar at the grocery store, okay? What I'm talking about is the value of the dollar versus other world currencies, the euro or the Swiss franc or the British pound or whatever currency in whatever country's currency. The dollar is stronger than all the other currencies right now, even though it's the real strength in the dollar, its purchasing power here at home tends to be not doing so well, right? Anyway, a strong dollar putting precious metals under pressure, even though markets in metals today had a small up day. Gold settling at $17.49 per ounce, silver at $19.20 per ounce. Nice to see silver get a little bit of a bounce. I was afraid it was going to break through support at $19. It was down under $19 earlier today. A little bit of a rally to finish the day decently. Hopefully metals can hold their own while this dollar is in the stratosphere here. If they can, without a big decline, that's a super positive sign for metals. Oil today was up $93.64 per barrel for West Texas Intermediate. Natural gas has a down day, and you get $9.29 for their British thermal units. I think natural gas, whenever I see these one-day down days in natural gas, that always tells me the same thing, that traders have been making a killing in futures and options on natural gas. I think they're just taking some profits off the table here. I would too, right? Bitcoin today had a pretty good day, up today. Finally, a little bit of a bounce. Last I saw, 21,586. Bitcoin really needed this bounce, guys. It was just looking like it was in free fall from around 25,000. Nice to see Bitcoin have an up day. We'll see where, I think this 21,000 now becomes support. So we'll see if it can stay above that and kind of consolidate some gains there. Get ready for the next move up. In big economic news today, I'm sure most of you guys have already heard, they came out with new home sales report today. Was not a good report. As we've been kind of telling you guys was going to happen none of this should be a surprise to anybody that listens to this channel regularly. New home sales crashed to a 6.5-year low. Sales dropping just under 30% year over year, 29.6%. New home sales cratering just like existing home sales are. As I've been telling you guys repeatedly over and over and over and over, this market, if everybody wants real estate to be an all-cash market, well, expect the real estate market to shrink. There just isn't enough cash buyers to buy all these houses. And until rates and prices get into some kind of sync where first-time buyers and people getting into real estate for the first time can afford to buy houses with a mortgage, this housing market is just going to be not doing well. Now, it's great if you're a corporation or a hedge fund or a private equity group and you're buying houses for cash. Now, they're already finding bargains out there. The median price here, according to Jordan, for August so far this month is about $450,000. That's down from a high of $482,000. So it's looking like prices are starting to settle here in Vegas. Personally, I thought that they would be down a little more than they are. But I think this is, again, I've talked about that snowball going down the hill, and as that snowball gets further and further down the hill, it gets bigger and bigger and picks up speed. And I think we're just now, in real estate at least, starting to see that snowball sliding down the hill as far as prices on real estate go. I was reading the really interesting article today that told us that 72% of home buyers surveyed over the past 2 years have regrets about buying a house. That's an astounding number to me because there certainly were no regrets while they were buying these houses. The market was in a frenzy. People were doing things I've never seen done in my 25 years in the business. Buying houses well above appraised value, waiving important inspections, waiving appraisal numbers, and paying outrageous numbers over appraised value. So I thought that 72%, though, that's a pretty big number, man. That's more than 7 out of 10 home buyers over the last 2 years surveyed feel dissatisfied with their purchase. And the number one reason that they feel dissatisfied is because they feel like they paid too much. Now, you guys have heard me complaining about this paying over appraised value since the beginning of this blog back in June. I just thought that was the most ridiculous thing I've ever seen. It created this competitive thing, like it wasn't a person doing their due diligence and trying to buy a house to live in. It was almost like a game where there were new rules that had to be obeyed, and those rules were certainly not for the benefit of the buyers, all to the benefit of the sellers. The number two reason people felt dissatisfied, almost 30% said that they felt the process was rushed. They felt like they were forced to do things against their own interest, such as waiving inspections, waiving appraisal contingencies. Now, what that means is, and for you people who aren't real estate professionals, when you buy a new house, typically the house is going to have an inspector go out there and inspect the building itself, right? Is the roof sound? All the appliances work? Are there leaky pipes anywhere? Does the air conditioner work? Or does everything work in the house? And they're going to issue an inspection report that's going to give you an idea of what you're buying. Well, during the frenzy of the past year or so, people were regularly waiving these inspections. And sellers were insisting on it because, if something's wrong with the house and you have to repair it before you can sell it, that costs the seller money. So people were buying these houses without inspections and then finding out that the air conditioner was on its last leg. The furnace was on its last leg. All of these problems were there that would have been discovered with an inspection that weren't because there was no inspection done. And then waiving the appraisal contingencies, what that does is it makes sure that you're getting a fair price on the house, right? So if you buy a house for $450,000, that house should appraise for $450,000 or more. If the house, now in a normal times, if the house came in at $440,000, that was pretty much a deal breaker, or at least that contract breaker setting up a renegotiation for a new price and new terms and new settlement on the property according to the actual value. All of that stuff went to the wayside during the frenzy here, and now as everything's kind of correcting in real estate, well, the buyers are having some remorse over that. I thought this was interesting too. It said that the median price that was paid over list during this frenzy was $65,000 over appraised value. That was shocking to me because that means more than half the home purchases where they paid above list price, they paid more than $65,000 than the house was worth, which is a stunning, stunning thing to me. These people are screwed now because now they start out owning the house. They're already upside down. They already owe more or have it. They're more, well, I shouldn't say they owe more because the mortgages didn't adjust like that, but they have more invested in the house than the house is worth, right? And they did it now finding they have to make these repairs and all kind of other stuff they weren't expecting. That's not going to make for happy people. And now with prices coming down, well, it's just going to make the problem that much worse. It's just a terrible situation. And you know, these crazy things usually end crazy, and it seems like they are. 36% of the people who wrote offers over the last 2 years made the offer on the property sight unseen. So they never even went to look at the property to see what condition it was, to see anything about the property. They looked at some pictures on the internet and wrote an offer. And that was what real estate agents were advising them to do if they wanted an opportunity to buy. That was what it took. And I'm glad that, even though it's not so great for my business right now, I'm glad that things are returning to normal where buyers are at least have a shot at getting a fair deal toward purchasing. Some other interesting stuff I read today that you guys need to hear about. You know, we've been talking about the debt trap on this show since day one, and I've been advising everybody, if they possibly can, to pay their debt down and to do everything they can do to not add on any additional debt. Well, guess what? I was reading today, and I think it was a CNBC article, that debt levels for consumers are continuing to skyrocket. Personal loan balances are up over 31% so far this year. So people are continuing to just borrow money. I don't think they're borrowing that money for the luxuries in life. They're not spending that money at Neiman Marcus. Chances are they're spending that money at the gas station or the supermarket or, you know, other necessaries rather than luxuries. It's just astounding to me, though, that these debt levels are rising with rates going up, credit card payments going up. But I guess people do what they have to do, you know, to make ends meet. Another interesting thing I saw today was 97% of corporate executives surveyed. They surveyed 2,000 corporate executives. 97% said we are either in or heading toward a recession. And more than 50% said they see job cuts in the future at their companies. I guess the recession is still on, guys. And that means what we've been preaching to you guys all along still goes. Save your money as hard as you can. Set your baseline at 10% of your income. If you can save that much, that's a good start. At least get to that number. If you can save more than that, even better. We've been nagging you guys endlessly to invest your money conservatively. Now is the time to be a value investor, not reaching for big growth. We've been asking you guys, and kind of with strongest possible advice we have, to pay down any existing debt you have if you possibly can, and to do whatever you have to do to not take on new debt. Very, very important now. And we've also been asking everybody to spend their money more carefully, spend their money more thoughtfully. You know, buy the things you got to buy. Just be thoughtful and try to, you know, right now is a good time to save rather than buy if you possibly can. Anyway, guys, that's it for the day. It was a really weird day. We got way more data coming tomorrow, more real estate news coming. Thursday, unemployment numbers. Friday, Jackson Hole. Is going to be a very interesting finish to the week. As always, we appreciate your support for the videos and the channel. If you like what you're hearing, hit like, ask your questions in the comments section. Don't forget, askchuckbarone@gmail.com for your more in-depth questions that require a little bit longer, more thoughtful answer. We'll be back again tomorrow. Should be an interesting day. Until then, take care, everybody. Thanks.